Okay, welcome to the Swing Trading with Cycles channel. We're going to do a precious metals video today. It's December 17th. It's a Saturday, so nothing's trading, or precious metals aren't at least. And we're going to talk today about the so-called 30-year cycle in gold. Now, we've talked about in previous videos the 8-year cycle, how maybe we have our 8-year cycle low now. But we're now going to turn our attention to this notion of a longer-term cycle, which is being called a 30-year cycle. That's being discussed on Twitter. So this is a annual chart for gold, right? Or yearly chart, which is to say each candle is one entire year of price action. So let's look through it together, right? So this is data provided by TVC. This is gold spot. And you can see there's not great data before 1968. So 1968 is our first candle. But but still obviously a great data set to work with. And keep in mind, when we talk about cycles, I'm looking at price action. I'm not like, oh, well, there's some kind of mystical time period that price needs to adhere to. No, that's not the way it works. At least that's not my approach. We're looking for the price action. We're looking for major swing lows leading to major swing highs, which lead to another major swing low, because that's what price does. It goes from swing low to swing high to swing low to swing high on every time frame, including the grandest. And this is what we're looking at essentially, which is why I wouldn't be hung up on 30 years or whatever on like a specific time period. I just call them like long-term cycles. In this case, this is like a macro cycle. So let's start from 1968. We can see a very clear uptrend here. So first off, I'd say to my eye, this whole thing, this is a big cycle, right? So like from here, this is your top. That's year 13. That's your bottom. That is year 34, right? So like that entire thing is a cycle. Let's see. That's your 2000. And so that is essentially your 30-year cycle theoretically, right? Like, and let's just see, what is the low there? So that's 254. Oh, actually, no, that is your low, 252, 254. So that was actually a little back test. So that's your low. So 32 years, right? So you have a top on year 13, and then you decline for like 20 years. So that's a rough long-term cycle. And so the notion then is a new long-term cycle started, that point. And it looked like we might have made a top here, but then we came back and made a slightly higher high here on year 21. And that puts us now right about year 23. So if you kind of project it forward and you say it's about 30 years, your expectation is that it is going to end somewhere around 2029, right? Now, everything has a long-term cycle in the sense that that's how price action works, right? It goes, you have a rally, and then you have some retracement, and then you have a new rally, and then another retracement. That's on an endless loop. That's what cycles do. So it makes sense that they would be on the grandest time frames as well. Now, here's the thing. It's obviously not super practical to trade 30-year cycle. And so it's important to break these things up. Within a 30-year cycle, you're going to have multiple smaller cycles. In the same way that within a weekly cycle, there are multiple daily cycles. Within the 8-year cycle, there are multiple weekly cycles, etc. So having identified this big pattern, and so I'll just add this number here just so that we're clear. That's 13, and this is a low on year 32. And then here we actually had a high on year 21, right? So another way of saying that is that this cycle was very left translated. Topped on year 13, bottomed on year 32. This has been very right translated, but there was a scare here, right? So that was, and so far this has been the top. We didn't make a higher high this year. And so now your question is, the big question, are we going to make a higher high? So are we going to do something like this? And then start to descend into, this cycle low around, the closer to 2030? Or have we already peaked here, right? And really this is kind of a double top because it's a marginal higher high. And are we just kind of heading down, right? This is obviously the thing that really scares bulls, right? Might keep people up at night. But to understand what the likelihood is there, it's important to understand the smaller cycles that fit within those. So without further ado, let's talk about those, right? So we'll keep these numbers here for now, and I'll add the arrows. But let's talk about the more practical cycles for a second, right? And let's like that again, that live within this larger cycle, which is undeniable. I mean, if you can read a price chart, you can see this. I mean, it's just, okay, yeah, price goes up. This is your swing high. That's your swing low. This, okay. So, well, look at this smaller cycle from here to there. That's 9 years, right? That's about an 8-year cycle right there, right? But let's even zoom out a little bit more. We're not going to go that micro, but look at that. That's a cycle right there, right? That's a cycle that has a top on year 13. So that's the same. But look at that. That's a significant swing low on year 18, right? So that's important to think about that way. Like, and you could just argue, oh, well, that's just a half cycle low within the larger cycle. Well, same difference. It's still tradable. That's the point, right? The point is to make it actionable, something that you can trade off of. So the way to think about it is this cycle of 18 years was right translated because the top came on year 13. That is tradable. I mean, even that is obviously pretty long term. And again, even within this cycle, you can see this little cycle and then this other cycle, right? So this is your half cycle low and this is your full cycle. I hope you're seeing this, right? The cycles are nested within each other, as I said. And then you have this bearish, ugly cycle where we get a top on on year 2, right? Like, isn't that ugly? Right? I hope you guys are following me here, right? So, I mean, this is actually going to be really interesting to watch how this kind of unfolds over the next few years, and we're going to get there. We're obviously still on 1987 right now. So we have this cycle for 18 years that tops out on year 13, and then we have the beginning of this cycle that tops out on year 2 and goes for how many years? 14 years, right? I hope that's sounding familiar to you now, and I'll get rid of this right now. But like, isn't that kind of like 2 8-year cycles, basically, right? So another way of saying that is this is 2 8-year cycles and this is 2 8-year cycles. And notice, right, like this is the really important bit, right? These are 2 really bearish 8-year cycles. These are very left translated. It's a downtrend, in other words, right? You have two 8-year cycles worth of a downtrend. So you do have a little rally, right? Because every cycle has its little rally, but it peters out. Like, look at this little rally. That was one of your rallies, and then you kind of dump, right? So, and this is obviously looks like a pretty strong rally in real time. You could have made money here for these 3 years for sure. But I mean, my God, a cycle that's 14 years, but it tops out on year 2, that's brutal, right? And that comes after this pretty nice cycle of 13-year rally, right? And an 18-year cycle, right? So this is where it gets really interesting. You now have this incredibly bullish cycle, the one that started in 2000. Look at that. Woo! So that's a top on year 12, and we bottom on year 16. Is that your low? That's 10, 50, 46. Yep. So we bottom on year 16. Was that year 12 we said? Yep. So year 16. That's, I mean, wow. Now things are getting really interesting, folks. Very interesting. We're coming up to modern times. Let me just add the arrows, a little patience. Okay. So, okay. Well, now we're cooking with gas, aren't we? So now we've had this is a really right translated daily cycle. And again, don't get hung up on call it like a long, medium term cycle. But so these are around 15 to 16 years, right? So like, let's just call them the 16-year cycle. This looks more familiar to this, right? I mean, look how bullish this one was. This is nice and bullish. And then we have this really ugly one. I am afraid to say So this is interesting though. The difference though is that this cycle, the peak was nowhere near the peak of the last cycle. Whereas this cycle that just started, right now we're getting up to modern times. And again, it's not about bias here. It's what is the chart telling us. This cycle started. So this cycle is on year 7, right? And so far, the high has been year 5. And if it goes for, let's just call it 16 years, right? Let's say, right? We would expect our low around 2031. And notice that doesn't line up with the longer term cycle that we first kind of lined up, right? Where we put this as our potential bottom. And that's okay. These things are very long term. And that's the whole point, that like it's not like there's some kind of specific band, like, oh, well, it has to be that. So this is month 5. Just make sure we write that down. And so now things are getting interesting, right? Because your question, again, this is your big question. Has this, call it 16-year cycle we're using, I mean, again, one time it was 14 years, and we have a small sample size here, obviously. Has this, 15 to 16-year cycle, has it topped out on month 5? Or are we going to make a high closer to year 10 or 11 or 12 the way we have in these past years? If we did that, that would be, well, let's think about that. If we got a high on month, let's actually say year 10, right? That would be 2025. Interesting. Right? Like, so just thinking about some kind of bullish scenario where we get a top on year, like, we go up like that, something like that, and then we come down. I mean, who knows where the bottom is, right? But that would be your bull case, right? Like how the rest of this cycle will play out. Now, again, the other way of thinking about this is this period, and this, I mean, really, the period from here to this line, more or less, is about 2 8-year cycles. And obviously, this is the first 8-year cycle. And so your big question is, when does this 8-year cycle end and the next 8-year cycle begin, which is the back half of this longer term cycle? I hope that's not confusing. And again, it's very possible that we bottomed in an 8-year cycle in September per previous videos. And so we would be starting the advancing phase of the second 8-year cycle within this longer 16-year period. Again, just like this. So it would be essentially this 8-year cycle. That's where we're starting here, right? Or this 8-year cycle, which again was pretty ugly, right? In this case, where, my God, this is a good point where, like, okay, we have 16. I mean, look at this rally. If you start to question, well, was there an 8-year cycle low within here, right? And well, which is really interesting, right? Because obviously this year was really rough, right? This like doji year, right? 2008. So that makes sense, right? It was such a violently like this impulse was so violent on this like longer time frame, right? That it was just a little wiggle. Like on the lower time frames, on the monthly, you obviously had multiple months of red because of this, doji candle, but that's all it could do on the higher time frame. That is really interesting. So that's my take on it. And we're gonna see how this plays out. Again, like you think about it, the bull case would be a high on year 10, right? Which is not till 2025. And this video is at the end of 2022, so we have all of 2023, all of 2024. So we have a couple years, and so think about that. Within that time period, a lot could happen. It's really just a matter of, are we going to shake that off, make significant new highs above 2000? So when you think about it that way, it's seeming more likely that that's what's going to play out, right? And of course, think about the bear case, right? No matter what happens, we're going to have an end to this 8-year cycle, and so we're gonna have a rally of the next 8-year cycle. So it'll really just be a question of like that rally being kind of feeble, right? So something like that maybe, right? And then it's kind of, so another way to say that is it would be a really left translated 8-year cycle, right? That's what the bearish case says, right? Because we're going to get an 8-year cycle low, and so it's just a question of is it going to be is the next 8-year cycle going to be a robust one where we're going to rally for a long time and a significant amount, or is it going to be a feeble little rally that rolls over quickly? Like these are essentially your paths, but either way, at some point we would expect some kind of low, and it's not because of some mystical timing band. It's just literally the structure of the chart, the way prices aggregate over time, right? The way they trend. Right now, it's in an uptrend very clearly, right? We'd have to break below here, down to like 1,000 to break this uptrend. I mean, so on the highest time frames, it's in an uptrend. So it's just a question of how prices trend over these long time frames. So we'll leave it at that. This is again our evaluation of that 30-year cycle. And clearly there is a longer term cycle as a summary, but more important to understand the smaller cycles within it. I think the very interesting one is this like 15 to 16 year cycle. And obviously it's stretched to 18 years here. It's nothing is perfect. It's really just a ballpark kind of idea. And so this gives you some timing bands, obviously, multiple years of error on either side, because you're talking about, a cycle that's over a decade long. But thank you for watching. Would love your thoughts in the comments.